Good morning, and apparently we're live. And welcome to my daily plan while the market digests or has indigestion with the FOMC numbers, as well as the earnings front. We have Oracle. The market wasn't thrilled with those results. Some of the software names, other software names, I think Adobe was kind of reacting. Another one, we had CNN Networks this morning in the optical networking space, which is sort of AI adjacent, and that showed a real positive reaction. And so the AI narrative, winners and losers, is still being rewritten along with the FOMC thing. And so the market's doing what it does. I guess we had jolts. I see a little red. I don't see a big, a huge reaction. You're kind of right at the stall point. Okay. So quick review. Yesterday, I imagine most of you were there, as is typical of a FOMC day. The straddle price or the volatility just stayed stuck the whole day near 40. Then when we had the announcement, we had that positive reaction. Then we kind of had some whippy stuff. We overshot to 3,900 and kind of settled in right in the all-time highish range. All-time closing high, the all-time intraday high was the same day, October 28th, I believe. And that was at 69.20. And so that brings us to where we are now. Today we have AVGO, Broadcom after the close, which is another part of that narrative. And we're kind of going to have to see how this thing plays out. The other thing is the VIX space is kind of interesting. Okay. I agree. Okay. So I just wanted to make sure that I had a proper read on it. I follow Z Contrarian. I think he's a real common sense guy. I'm going to show you what he said real quick. I follow a lot of guys in the vol space, but so I was looking at this, and we'll look at this. Futures fell hard, but VIX front future, barely up. Whereas it's matter, the VIX front future should move up, but it only moved up a little bit. So it's basically a nothing burger reaction, which is what I was trying to parse out. I actually mentioned in my note a little bit. It's hard to articulate the relationships in like 3 lines. And so here we have where was it? Where's yesterday? Let's look at the VIX space real quick. So, yesterday in the pre-market, VIX was around 17. Then we were like messing around in the high 16s with the 9-day VIX roughly equal to the VIX. We'd like to see a point and a half, 2-point difference. A 0.5 point difference, a 1 point difference is a little low, meaning near-term worry, so to speak. And then overnight session, whatever just happened overnight, here it says 16.7, but I saw we spiked to 17 here. And the VIX front futures are up a little bit, not that much. This difference, to the extent that the VIX is going to resolve, and the VIX futures are going to resolve to each other. It looks to me like the reaction from the VIX futures market isn't, oh my God, there's some imminent disaster. I think the vol space has to reset a little bit. And yesterday I was doing something with Master Bailey with the VIX ratio. It's on YouTube. And okay, VVIX isn't going to reset until after we open, and this is a daily. So, but what we see is the ratio is kind of stretched. Just historically, when it gets up here, we're a little toppy. Now it can get further, as you can see. It does mean imminent disaster, but we just need a little reset in the vol space. I think the reset will be VVIX coming down a little bit, correcting that ratio, and VIX coming back to 16, kind of where it should be. So I'm not thrilled with the way the VIX space is. It's okay, no big stress thing. I'm just not thrilled with it. I'd like to see it a little more in relationship. So overnight session, I'm not sure what happened. Where are we? My assumption was that it was Oracle, but it could have been anything else. I don't really know. Well, we bottomed out over here at 68.20-ish. I caught a little scalp, by the way, and sold some E-mini puts. And now we're just kind of in this stall zone. And while my compatriot restarts his internet, let's get to the options chart. Okay, so basically what we have here is don't torture the data. Why? Because these numbers are relatively small. To gain a sense of proportionality, this is only 500 contracts at 69.20, 600. Not a lot to stop or move one way or another. This magnet area, 500 contracts, 500 contracts. And these are customer long calls up here. So customers are long calls up near 68.90, 68.95. A little bit right here at 70. Some puts, some calls mixed, nothing burger. At 68.40, 300, 400 contracts. Again, nothing. This whole cluster from 68.35, this is market maker short, kind of potential magnet through here. You have 1,000, 1,200. So this cluster, here at least we have a cluster we can hang our hat on. Below 68.40. So if we break down here below 68.40, we could kind of get sucked into this cluster somewhere. On the other hand, if these options decay, or unless they go in the money, they will decay, that can act as a tailwind pushing us up. As we go down, market makers have to short to balance their deltas. But then as we move up, or even if we stall, as those deltas erode, as time passes, if they're out of the money, they eventually become zero. Market makers get to buy back. But the main picture is there's really nothing much here to hang your hat on in the 0 DTE alone. And I could go here and do 0 and 1 DTE, but what I did, just for my ease of reference, was with Periscope, I selected 2 expirations. I selected today and tomorrow, just to see what's going on in the gamma world. So here's gamma, not position number. So how much it's affecting us right here, right now. Let me zoom it in a little bit. And let's talk about what we see. Okay. So what do we see? In the gamma world, we see 68, 65, which I said was my stall, kind of right where we are. So we have kind of stalling feature at 68, 65 to 68, 80, which I kind of, top of the chop zone, next zone where we could stall out. Below, kind of where we're kind of hanging around now, heading down, kind of a path down to a nothing burger notch at 68.40, and a little bit of positive gamma down here. Now remember, gamma is dependent on how far we are away from something. So as we get closer, the size of these bars is going to increase, but so the size of these bars. Oh, he's back. Okay. Let me put him on the screen. What kind of guitar you got there?
It's a Stratocaster.
A Strat.
Okay. Yeah.
I had a Fender in 1972. I had a Fender. No, it was a Telecaster. It was a white neck, a maple neck Telecaster.
Oh, nice. But, yeah, I've done some work to mine too. I've lifted a couple things, made it pretty custom. I like it.
I got my acoustics in the background. I'm too old. I play acoustic now.
You don't have it anymore?
No, I don't have it anymore. It's a long time. It got lost in the rough and tumble of a half a century.
Fair enough.
Okay.
Sorry to keep you guys waiting. Had some internet issues that I got squared away. So excited to get going.
Okay, so where were we? Okay, so as I was looking at this, and basically from the local gamma point of view, there's just not a lot to hang my hat on. Don't torture the data, as I like to say. I got that from Paul Duncan at Gamma Edge. And here you can see, just kind of look at the coloration between 6820 and 6900. It's kind of reddish, which is basically negative gamma, which is basically anything could happen. Now, yes, market makers are long gamma, as they like to say. Way up here, 6800, and if I zoom out down here, but locally, gamma is negative. I'm sorry. People like to say we're in positive or negative gamma. That's one of my pet peeves. Let's look at depth view, then I'll turn it over to you. And so if we look at depth view, here I have it on customer side. So I was doing a little demo yesterday. And so what do we, actually, let me leave it on customer's view. This might be more instructive to some people that aren't used to thinking backwards and forwards. So here's where customers, hedge funds, me, Chewy, whoever, are long or short options. And so green means long, like we're used to looking at it. So what do we see? Customers are long options all the way from 68.20, but here they're long puts. This is just if they're long. Here, I could separate it out, but we're not going to go through all that. Long options from 68.20 all the way up pretty much to 69.15. So what that means is in this range, market maker is going to be hedging in the direction of the move. However, these numbers are small. 164, 445. These numbers are small. So there's just not much of a hedging impact that's going to be required. Now, also, I might need to refresh this. And so you see negative. So this is just kind of a wide whippy range. And so let's lean on what's there tomorrow, because this has to be hedged out too real quick. So we have a little stuff at 68.90 for tomorrow. Market make a long gamma up in the 6,900-ish range. So that could slow a bit of a move up. Oh, there's really nothing much to the downside to act as support until way down here at 67.70.
And I think that's kind of the risk of today, right? I mean,
yeah, so gun to my head, 68.50, that this zone adds up to be enough to support us should we go down. I think we just kind of end up playing around where we've been playing around, 68.60 or 68.35, somewhere in the same zone as we bounce around, you know, in both directions. And I don't really have gamma to hang my hat on to say where we might end up. If I had to hang my hat on gamma, I would say toward the lower end of the range as it is right now. But if we can get moving above that 65, then there's an equal chance we kind of head up there. So it really depends on the open and really, you know, which side of the inflection point we end up on. I mean, right now where we are with 68.59, so we need to get over this stall feature to start scaling the ladder. And with that, I'm going to remove my stuff and take it away.
all right, let me just make sure I'm following correctly. 1 second. You guys can see my screen, right?
Yeah.
Perfect. So right out the gate, we're already in our range. The range that I have highlighted is going to be the 68.76 down to, call it 68.58 area here. I don't think we're going to be in our range long today. I think it's going to be a relatively short kind of range hold, and then we're going to have a move. What direction will that move be? Unclear as of now. Gun to my head, it's going to be to the downside. Very important for me to see if we can break 68.58 and if this little bounce here is going to be short-lived. If that would be, then I would really try and target 68.20 down here as kind of the end of the move today. But
that's a pretty big move.
Yep. I think it could be bigger than yesterday easily. So I mean, I like to kind of prepare for anything, and if that happens, I think we're not flying blind, right? We have things to target on our way down. That was annoying.
And just to answer his question, yes, to answer Sherman's question, it's very typical that when we have a big reaction historically on an FOMC day, we kind of give a lot of it back the next day. It just kind of happens for whatever reason.
Right. Yeah, and I mean, which would make, I mean, the only thing I'd say is we have kind of given it back already, right? So I'm a little worried that it might be smaller. I'm not going to trade my worry. I'm going to trade kind of my intuition and my system, and that tells me we can target down here pretty easily. That being said, we might have a quick pop, call it a bull trap, whatever you want to call it, and then we have a nice move down. In the off chance we don't reject, then we have a nice hard reject up here, which is kind of the high of yesterday's move. Honestly, pretty basic day in my eyes. And if we turn on the gamma string that you publish,
right,
it looks a little bit like that. Gonna have your downside up down here for us, and then your upside up here in my reject zone as well.
Okay, so and so that adds strength to the reaction, or more reason to get in or get out at a particular level when we have a confluence, and when we kind of know what the market maker reaction should be there. It's not just reaction, it's we know what the reaction will be.
Right. Yeah, and as I like to say, sometimes these gamma levels tell me when not to take a trade, and I think that.
I know, I like that the other day. I like that. That's a good line.
Yeah. But I'll be posting these in the cheat sheet room. Any questions, updates will be found in there as well.
Okay. And just so you folks know, he has a training course for hold on, what do I want to do? For E-mini scalping, and a lot of prop traders like to take that because they seem to have they seem to have trouble with that whole prop trading, making it then missing it, whatever that craziness is. Luckily, I've never been involved in that world. So yeah.
Switching gears, updating the rules to make things harder. So you definitely have to be risk off when trading those guys if you don't want to just burn accounts.
Right, and that's a lot of what you focus on, right? It's money management and stops and all that thing.
Yep, exactly. Risk to reward profiles that make sense, and being able to trade kind of imperfectly to make that money. I think a lot of prop traders try to be too perfect, and then they go too heavy and they blow the account relatively quickly.
The boring part, the money.
That's right. Yeah.
The money management part. I remember one of my TA mentors, when, with the share sizing and your stop is going to help determine how many shares you enter and all that. He used to stress it. That shit's boring as hell. That's just boring. I'm not going to lie. I didn't like that stuff. Okay, so right now we have an expected move of about 30. And I'm willing to say that from here, we probably stay within it. Sounds about right. Real quick, here's a trade that I took yesterday at the close, right after the close. Sold this spread. I'm just kind of playing around with 5 wide spreads. A lot of people trade 5 wide. Not everybody does 20 wide like I like to do. And so this got about $1.30, and if I wanted to close it out now, it's $1. So if you wanted to close it out now for $1 and take you $30 and call it a day, you could do it. That's not what I'm planning to do, but I'm just saying, I'm just trying to model out to teach you to fish, not to fish for you, to teach you to fish how, some ways to look at it. We talked it through in the room last night. And I kind of even said, I don't have a lot of gamma to hang my hat on. So I'm basically using delta, which is part of the discussion. But if I have a gamma strike above or below me, that's going to reinforce it. Delta is kind of imperfect to use alone, in my view. So anyway, that's that. What would I do now? The old gun to my have? Yeah, absolutely. Yeah. Q line. Oh, we got comedians here. We got comedians here, folks. And I mean, if this juice stays in the juice bar, 67.90 with 15 wine for 80 cents. Wow. I mean, I would take that in a heartbeat without even thinking about it. I would take anything below 6,800. So if we wanted to do a 5 wide now at this stage of the game, and if you're okay with 35 cents ish, or even if you want to go be a little more you know, I think you can probably do something like that for 50 cents. And do 50 cents on top somewhere. But 50 cents on top somewhere might be a little tricky. Yeah, something like that for $1. Whoops. 75, something like this. Probably okay. Send one in to see. As far as flies, clearly the put fly. And let's go back to the chart for a minute to determine what kind of put fly makes sense. And let's go here to the dashboard again. And here we see a fly right here, 40, let's just call it 40, 30, 20. Or 4, we want to do a 20-ish wide. Let's see what we want to build. We want to build a fly, move this down. Well, that's going to put me right inside this. So I already have stuff over there, so. But I would put that fly right in here. I would put a 35, 25, 15 fly would be good. Or 40. Hold on, let me do a 5 wide just for fun. Let's see what we would do here. I'll put a 5 wide right on top of this, 30 cents. I would widen that out, whatever. But I have this over here. Anybody knows London clothes have been less supportive last week? I hadn't noticed, but it wouldn't surprise me. Actually, wouldn't surprise one way or another. I don't know. And a fly to the top side, I could probably get a cheapie, $1.05, not as cheap as I would like. Where are we now? Oh, we're at 58. We're not, oh, that's not bad at all. Screw these bears. I'm going to throw this in over here too. And these kind of days, it wouldn't surprise me to see us be on both sides of the fence. To see us down below 68.50 for a while and then back up above. Yeah, so that's basically it. What time is it? 9 o'clock. Wow, we're getting better at keeping to the time frame. Any closing comments? No, any comments? Oh, and I did a video last night with Master Bailey. I kind of hopped on at the end. I'll get the link out. It should be all over Twitter. I hope. If not, then I'll have to call the press corps and see how come it's not being posted. And yeah, and that's it. I'm doing more of these videos. I kind of like them. It helps me overcome my natural shyness.
A lot of people kept telling me that they were surprised I wasn't Vince Vaughn, so I felt like it was important to show face.
All right, so time to the masks must go, huh?
Yeah, I wish I was. No, I'd say today I'd watch out for upside move. Wait for the first hour. If that upside move continues, then feel comfortable with joining. But I'd be very skeptical the first hour until there is actual structure. to be a part
Right,
of.
and a day like today, I think we have to put the technicals and the gammas a bit to the side, especially it's easy for me today because the gammas are kind of weak today anyway, because we have a whole world of algos re-rating this bullshit, my friends. You know, interest rates, hawkish cut, it wasn't so hawkish, it was dovish, lower weight, maybe it wasn't because when he said this word, he scratched his nose, and all the other nonsense that's going on in the tea leaf reading, and throw in the AI spend, are they spending enough, and all that kind of stuff to make it just a brew. Now let's remember next week we have VIX expiration, which we didn't talk about that much, but we'll maybe Friday or over the weekend. We have VIX expiration. We have CPI. We have alphabet soup on 2 days, I think. We have CPI and NFP, and we have VIX expiration. We have QYLD roll on Thursday. We have the largest SPX and index options expiration of the year, Q4, all coming next week. So there's a lot going on right here, right now. So if the market is a tad, doesn't respect our levels perfectly, you know, there's enough going on in the background to explain that. All right, everybody. I'm going to call it a day, and we'll see what happens.
Yep.
Take care, everybody.
Have a nice day. Bye.